Thank you. Well, I'm very pleased to be here today, and I'm also pleased to tell you that I have a Kentucky connection. You see, my great-great-great-grandfather, he had a hell of a name, Zorobabel Maddux. He was from Maryland, and he made one really bad decision. He decided to side with the king during the Revolutionary War. And when he lost, he was basically run out of Maryland, and he came to Lewis County, Kentucky in 1790 as a surveyor. So he came here, and my great-great-great-grandfather was born in Mason, Kentucky. And Kentucky has this history of accepting these outcasts, and it is so appropriate that I'm here today keeping up with your record of taking in outlaws. So today I'm going to give you a little background about my experiences growing up on the ranch, going to Wall Street, and then returning to the ranch that I grew up on. So I am a product of western Nebraska. My great-grandparents came out and homesteaded and built a sod house and proved up on a homestead there starting in 1886. I want you ladies to know in the audience that I come from a long history of maternal influence in my family, because my great-grandfather, his name was Taylor Maddux. He was a horseman by nature. He really loved his horses, and my great-grandmother Clara was a really solid gal. You see, Taylor started out in McCook, Nebraska in the early 1880s, and he ran a livery stable. And you can see him there with his racehorses there in front. And being from Kentucky, you know there's nothing wrong with a racehorse. However, my great-grandfather had two other problems. He liked to gamble and he liked to drink. And that isn't necessarily always a good combination with racehorses, and didn't fit with my teetotaling great-grandmother. So she went out and homesteaded and lived in that sod house, and my great-grandfather rode out every 2 weeks to see her. So she really was the base of our operation, and she's the one that proved up on the homestead. So Taylor really, again, was a horseman and traded a lot of horses. And, you know, in that horse trading, you know, he really felt like that was a way he could really build some equity in his business. So 1890s came, terrible drought, a financial crisis going on in the country, and people were coming to my great-grandfather to trade him land. So he kind of made his first good trade. He traded a half section of land for a horse and a saddle and a pair of spurs. Says it right there on the deed for that land, a horse and a saddle and a pair of spurs. But because my great-grandfather was a horse trader, we don't know for sure, but my family was pretty sure that horse he traded for was a bronc horse. So I grew up on the ranch and went to the University of Nebraska as an undergraduate, and my dad encouraged me. He says, you know, John, you know about a back end of a cow. You need to go to business school and learn about business. So under my dad's prompting, I went to the University of Chicago to get my MBA, and I specialized in finance there. an incredible experience for me and a life-changing experience for me, coming from Western Nebraska and going to Chicago to go to business school. One quick story. My dad told me, by gosh, if you're going off to business school, do not take those Wranglers, do not take those cowboy boots. He says, make sure you've got a suit. You know, the minute you open your mouth, they'll know you're from the country. And you know, I want you to kind of have a little bit of an air that, you know, you weren't just, a ranch kid showing up in Chicago. So I took my suit and I went to that first orientation at the University of Chicago, the first day. And I walked into that big auditorium and all the other students are there in shorts and t-shirts and you know, dressed like they were going to a concert, rock concert or something. And I looked around and there I am in that suit, and there's just one other fella in the whole room wearing a suit, and he was from Berlin, Germany. So I thought that the two really that stuck out were a foreigner and myself at that orientation. So, but a great experience going to the school at the University of Chicago. So after I graduated, I got interested in finance, and I decided I was going to interview and try to get a job on Wall Street. Now, in the interview process there at the University of Chicago, I was really fortunate because as I was going through the interview process, the guy that came to interview me grew up outside of Knoxville. And his family had a little acreage there, and they had some pulled Hereford cattle, and so it was just by the grace of the good Lord, he was my first interview there. He liked to hunt pheasants, and so we talked about hunting and pheasants, and you know, the reason I think I got a job at Goldman Sachs is when I was interviewing with Bill Lee, I made it sound like there were pheasants absolutely growing out of the ground on our ranch in Nebraska. And but I ended up getting the job interviewing with everybody in Chicago and then on into New York, and spent about 15 years at Goldman Sachs. My whole idea, the whole idea of going to New York was to get enough money where I could buy a ranch. That's what I'd wanted to do since I was, 10 or 12 years old, is I wanted to not just have my family operation, to have my own operation, my own ranch that I did on my own. So when I was getting close to graduation and told my parents that I was thinking of interviewing, my dad was kind of disappointed. He was expecting me to leave business school and come back to the ranch. But here I was going to go off and go to New York City, work on Wall Street. So my dad was disappointed, but then, I started making a little money, and my dad was from the old school. If you're making a little money, gosh, anything is a good idea, And every year he would be waiting. In Wall Street, you got a salary, but your real payoff is your bonus at the end of the year. It came about this time of the year. Oh, my dad was more excited about my bonus than I was. He was pleased that I was making a little money and putting some money away to buy a ranch. So I talked to my mom and dad every Sunday night. And of course, my dad had a complete turnaround from kind of disappointed I didn't come back to the ranch to excited about being on Wall Street and making money. And so I told him, I ended up buying a ranch on my own, and I just lost a little of my enthusiasm for Wall Street because I'd kind of achieved my goal to buy that ranch. So I was talking to my mom and dad on a Sunday night, and I finally said, Mom, Dad, when I get my bonus at the end of the year, I'm gonna resign and I'm gonna come back to the ranch. Long silence on the other end of the phone. And finally my dad said, well, John, you can come back to the ranch if you want to, but I'm here to tell you it'll be the first time in recorded human history that a rat has ever swam toward a sinking ship. So Goldman Sachs was a great place to work, a fantastic place. Marcus Goldman was a German-Jewish immigrant who gave up his father's business. He was a cattle dealer and a cattle drover, ironically enough, in Bavaria, in Germany. And he came to the United States and worked in the investment banking business. And by 1890, he had $700 million worth of commercial paper, $700,000 of commercial paper that they'd handle in a year, which, you know, is a huge amount of money for those times. So a long firm, a very Jewish firm, a very New York oriented institution. So I spent my entire time there at Goldman working on a trading desk selling bonds and trading bonds. And it was a terrific environment, a very fun environment, a very casual environment, lots of joking and lots of give and take between you and traders and other salesmen, a great environment. So when I was asked about what I really got out of my experience at Goldman Sachs, I really think I relearned universal lessons that I got from my grandparents, Glenn and Eva, and from my mom and dad, Jack and Carol. I know I got some other things, but the key important things were just a re-emphasis, a rededication to those universal ideas. So the first thing at Goldman, I think that working on that trading desk was an intense focus on markets and all things financial, which I think it encapsulates my grandparents and my parents as well. Just the idea of continually thinking of, I am deploying this money. I'm employing $1. Am I going to get $1 and a nickel back? That continual idea, am I going to get a return on this investment? Am I going to get a return about deploying Goldman Sachs' capital and getting a return on that? And that exemplifies my grandfather and my dad to a T. And the good thing that I think is different from them, that at Goldman Sachs, you thought that intensely, but it was until 5 o'clock in the afternoon. And then you had the ability to leave the markets, go home, and have a separate sort of life, which I can tell you now on the ranch I don't have. So one key idea that I think I have kept from Goldman Sachs is this idea of the cost of capital. Continually thinking about, I have this capital, both capital that I have myself internally and capital that is borrowed from some other institution. Am I employing that in the best possible way? And at Goldman, that was a super intense questioning always, have I deployed this capital in the best possible way? And for us today on our ranch, we try to look closely about our structure, capital structure on a balance sheet basis. We've got these assets, we've got cattle, we've got land. Do we have the right mix of debt and equity? Unfortunately, in the cattle business, it's a relatively low margin business, and the variabilities of that business force us to operate at a relatively low debt level because we can't stand the big ups and downs of a cattle market in commodity production. So we're always asking ourselves, do we have the right amount of debt and the right amount of the ratio of that debt to equity for our operation? It's a continual question we're always asking. So one thing that I think that is different in how I operate our ranch relative to my dad and grandfather is that we have more diversification. We've diversified our asset base to include other kind of assets other than land and cattle. So in that way, we have more of a portfolio approach, that we have financial assets in the form of stocks and securities, in addition to having our land and cattle. So we've diversified away part of our risk by having other sorts of assets in our portfolio. But ultimately, we are a ranch, not a hedge fund. We are a ranch, and we operate our business as a ranch. So let me just say a few things about risk management, because that was a key thing that we were involved with at Goldman Sachs, and helped me frame my approach to risk management. At Goldman, we'd have billions, literally billions of dollars of securities, of bonds that we owned. So risk management was a key part of being successful. And the cattle business is a risky business, but it's also important to take some risks, especially in commodity production, where over the long run, price is equal to the average cost of production. So one thing that I have got from my experiences at Goldman is we always had some kind of market view. We may be positive on the market, negative on the market, neutral on the market, and it's okay to be wrong. What's wrong is if you have a plan, have a market outlook, not to act on it, to not execute it. It's not an okay to not execute what your approach, what your market outlook is. So 2 points that I got from that we employ today is that it's really important for us to have a written plan for risk management. And the reason is it goes back to a little flaw in the human character. We have something inside of us that says, oh, I can't do that, I might be wrong. Yeah, you got to realize you might be wrong, and you have to take all the information you have to make a good decision. But having that written plan, when it gets to a certain point, you can pull the trigger because you have it written and it gives you permission to act. And you can some way overcome that human frailty that says, oh, I can't do this. What if I'm wrong? And the second point is, and this is another little frailty of human nature, is doing nothing is doing something. Doing nothing is taking an active position in the market. You're making a proactive decision by doing nothing. So if you can understand that, again, human frailty, it gets you over the hump to make a decision, because doing nothing is doing something. It is taking an active position in the cattle market or the grains or whatever the case may be. So one of the other focuses that I think I have as a financial focus is thinking about our cow herd as a capital asset. That cow herd out there is nothing more than like a tractor, like a factory, like some other kind of capital asset, like this hotel here. It is a capital asset. And like all capital assets, it is depreciating every day. Every day, that cow is starting to get older and older and older until at the very end, when she's 10 or 12 years old, she's just worth a $700, $800 cow. So that is a cost to your business. That depreciation, that gradual aging of that cow, of the loss of productivity of that cow, is a cost to you that you don't write a check for, but it is a cost all the same. So cows are unique, at least in Nebraska, because they have a strange shaped curve in the way they appreciate and then depreciate. And in Nebraska, usually those run-in age cows, until they are 5 or 6 years old, are appreciating in value. And then once they get to be a 6, 7-year-old cow, you see a very rapid depreciation in their value as they are reaching the end of their mature life. So we try to capitalize on this appreciation and depreciation curves in our cow herd management. So we run about 2,500 cows, and we keep a large number of heifers to replace every year. And we run those cattle on a forage-based development system, completely like if we were just running a yearling, to run them out on grass for another year. So we really minimize the amount of resources we put into that heifer and try to keep her in somewhere between the 55 and 60% of her mature weight when we breed her for her first calf. So our business model is really focused upon this low-cost heifer development protocol. So a high amount of replacement in a very maternal type of animal. We have a composite made up of 5 different breeds: Red Angus, Tarrantay, Red Pole, South Devon, and Devon. We're trying to build a British type cow that doesn't take any extra feed, that she'll go out and graze 365 days of the year, that's low labor, there's low input, low amount of hassle. For us, we're trying to focus on fitness, which includes fertility and adapting to the environment, fitness and convenience traits being docile, great udders, polled, those kind of traits, fitness and convenience traits that are emphasized over high production and high performance traits. As you heard in our speakers earlier, when you have high growth and high milk, that adds to the maintenance costs of those cows and requires higher amounts of inputs. So we focus on fitness and convenience and have moderate levels, not low levels, but moderate levels of growth and milk in our cow herd. And in doing that, we have a crossbred cow that maintains up to 70% of the heterosis that's available to us in our composite. So having that high replacement rate gives us the ability to have a big volume of functional run-in age cows that we sell when they're 5, 6 years old before they start to depreciate. And we can capture that all that cow, that heifer calf, when it comes into our cow herd, should be appreciating in price for her entire life up to the time we sell them at 5 or 6 years of age. Here is just a little, do you know how I advance this video? Maybe I'll just hit it again. There we go. This gives you an idea of what our cows look like in the wintertime without any feed, without any supplementation. These are just dry cows that run on native range in the summertime. We run them on corn stalks in the winter, on rented corn stalks. We rent about 15,000 acres of corn stalks and run those cows on corn stalks. And those are a set of cows that we're just getting ready to sell at our sale that we have every April of heavy cows just ready to calve. So let me just talk a little bit about another part that I think I gathered from New York, and again that my parents and grandparents already had, was the power of culture and the idea of shared values within your operation, whether it's within your family, employees, whatever, and that shared values of and people in your organization and how important that is. I really feel like it is very important to our ongoing success as a business is this power of the little culture in our little thing at Maddux Cattle Company. So in this cartoon, Timkins, I want a coherent new corporate culture that will take us into the third millennium, and I want it by this afternoon. That isn't the way it is. It's a long-term project to build that culture within your family, within the employees that you have on the ranch. And my job is to nurture that little culture that we have and try to keep that thing going. When I was at Goldman, he had passed away by the time I started, but Gus Levy was a famous partner of the firm. He was a senior partner in the 1970s, and one of his big mantras they used to say to all the Goldman Sachs employees is, boys, we want to be long-term greedy. And I think that's just such an important concept in any kind of business, but especially true in the cattle business. Here's one of our key business strategies. A key management strategy is have complete integrity in all our business relationships. And this allows us to build long-term arrangements that allow us for expansion and growth in our ongoing cattle operation. One example of that is running cattle out on grass. We're really committed to raising cows at home, and then we buy a lot of calves, and we winter them on the ranch, and then we have grass relationships where we send 6.5 to a 7-weight steer out to grass in May every year, mostly in Wyoming. And one of the deals is almost 3,000 steers, another deal is 1,500, and we've had some of these relationships going back 15, 20 years. And things change, but we've had a similar 20-year relationship in Colorado. We have a similar one in New Mexico. So those kind of relationships are so important to our ongoing business of always knowing we've got a relationship that we know that grass is going to be there. And I got a phone call yesterday on my way here that we run a bunch of steers in Jackson Hole, Wyoming, and they say, hey, grass has opened up for another 350 steers. Can you send them to me? I said, sure. And we have that kind of relationship where we get those phone calls, and it's so important to our ongoing business operation. So embedded in this idea of being long-term greedy is the whole trade-off between short-term and long-term. And that's so applicable not only to your business relationships and your integrity, but it's also so important in the natural resource environment of cattle, which is a biological system. So in the range management, you can always have a short-term versus a long-term perspective, especially in our environment. We're a more fragile ecosystem maybe than a fescue environment, but there's still those trade-offs between short-term and long-term in the terms of managing your land resources. But boy, that's true in the cows too. You've often heard it said, boy, you can't starve a profit into a cow. And that's so true that we can really try to be short-term greedy on maybe managing that cow, but it has long-term implications, negative implications for the profitability of your business. So people are a big part of our business. We have about a dozen employees, and having that culture and that sense of common shared ideas is a critical part of my job and making sure I'm maintaining that. My dad used to say that our perfect employee comes to work for us and they never leave the ranch. And there is no substitute for those people who you can count on and know the culture, because when you have people who are working and just trading their time for money, it's a dead-end deal. It's a dead-end deal, and in the cattle business, it's so important to have that continuity amongst your employees. So my job is to recruit, to train, and retain those employees. We're really big on having lots of recruiting effort, trying to find the right people that fit our operation, and then put the resources into training them so that they know the decisions to make out there. We can't have an operation where an employee is going to be calling me asking, do you think I ought to move these cattle today? We need to have the employees with the tools to make those decisions, and then to retain those employees, to keep them around for maintaining that cultural cohesiveness within the business. So in the cattle business and on our ranch, there's so much tribal knowledge. Tribal knowledge about how do you handle this kind of situation? How do you deal with these kind of circumstances when they come up? And having that strong culture and having long-term employees allows you to have that tribal knowledge that everybody knows how to address those kind of situations. And it even goes down to something as simple as that tribal knowledge of, hey, where is the pipeline at? Where does the pipeline go? Where is this gate in a pasture? That kind of tribal knowledge is important to have through continuity and through a strong amount of people who've been there year after year. So for me, in managing our operation, 136 years, I have an unfair advantage because I had the benefit of my grandparents and 40 years of their influence on our culture. And it was the same was true at Goldman Sachs, where we had partners who were there for the long run. They'd been through tough markets and tough situations. They knew how to behave when those situations came up and knew how to avoid those landmines. So the same way is true with my grandparents, and 60 years with my parents and counting. My mom's still active in the business. She's 85 years old and still involved in every major decision that we have on the ranch. And I cannot stress this enough, the influence on our culture that we've had from our people, from the people who have worked for us. And here, since 1941, we have only had 4 ranch managers on our ranch. Willard Yost was there for 52 years, and he was like a father and grandfather to me and to my dad. And so we still have his influence on how we look about things, his work ethic, his approach to the business. Harlow Hill was there for 41 years, Dale Richardson for 5, and now my present manager, Robert Brocious, has been with me for 5 years, my family for 5 years. So that whole idea that we have culturally is to some way build within our employees this idea that I'm not trading my time for money, I'm here writing for the brand, that what I'm doing is important. It's more important than just the job and just the dollars and cents. What we're doing here is important for all of us involved in the operation. And that's the real challenge for me as a businessman, to maintain that culture and that commitment from my employees. So that's a little about my family operation. They're my 2 sons, Taylor and Tomas, in the photo, and I'd be glad to entertain any questions. Yes, sir.
I'm intrigued. Do you do the interviewing, and can you identify the signal that tells you the employee is going to buy into your culture and not trade time for money?
Yeah, I do. Yeah, I do. I'm involved with anybody that gets hired. And I would say the defining element in hiring somebody is hiring on attitude. We just sent an offer out to a guy who was born and raised in Britain. And he came to the U.S. as a soccer coach and got interested in the livestock business. Didn't have a lot of livestock experience in Britain, but ended up working as a pen rider. And I don't know whether he's going to come, but we offered him a job, and he is going to take some training. He's going to take a lot of effort to really bring him up. He can kind of sit on a horse, but that's about it. But he has a great attitude, and he has a great wife, and will be a committed employee. And I feel like if I have somebody who has a good attitude, that makes my job easy. All I have to do is get him the training. Now, I can't change people's attitude, but I sure can give them the tools to be successful. So I think it's more of a gut feeling and a lot of discussion between my mom, my employees, about whether this person will be a good fit to our operation. So it's not just John Maddux making that decision, it's a committee decision.
This might be off subject, but you've got 2,500 head, and notice they're all red. Around here, if we had 25 head total, and one of them was red, it's going to be pulled out and sold separate. Are we just getting robbed, or what made you not go black? Or
listen, the Black Angus breed is a terrific breed and has a fantastic database to select from. In our experience, though, the one thing we liked about the Red Angus breed was that the Red Angus breed was tended to be a little more of commercial breeders that ended up in the purebred business, and were a little more Western focused to the Western U.S. So a lot of our base Red Angus genetics came from Wyoming, Colorado, Western Nebraska. So we kind of felt like the cattle themselves were better fit for our environment of no feed, no extra resources going into the cow.